Hey traders, welcome to this week's Staying Sharp with COT Data Insights. I'm Phil Moves, and in this video, I'll break down the key market setups I'm watching based on the CFTC positioning data, macro catalyst, and price action. If you're following my newsletter, this will bring it all together visually. So, it's been 6 months since I started sharing these weekly COT based outlooks. And if there's one thing I've learned, it's this: you don't need to predict the market, you need to understand how it's positioned. And this week, the principle holds even more weight than ever. We've got a contract expiry coming up in the next 2 weeks, June 14th and June 16th. We've got non-farm payroll on Friday. We also have the ECB rate decision on Thursday. And underneath the surface, positioning is screaming for attention. We see Nasdaq look tired at the top, and Euro USD moving sideways, but it's still heavy for a drop. While USD JPY has been building a case for a rally, and this is my goal for this week, which is to stay sharp, respect the tape, and let the timing, not the emotion, you know, do the heavy listening. So let's dig in. First, I would have to review how the price action played out last week, which, when we looked at the data, we came into the week only interested after the close of Tuesday, which was what we could actually see here on the close of Tuesday. And on Wednesday, there was not actually any impressive price movement. Why was that? This was because we had the GDP print that was to be scheduled for Thursday. So this kind of day, just stay out and wait for the news release. However, there was a scheduled Nvidia earnings announcement, right? So this was the reaction here, and I believe we had another news about the um, tariff of an on drama, right? And this caused this spike. I was completely out of all of this. I was not even awake for all of this, right? So the main focus was on Wednesday. I realized, well, there's GDP print, there's nothing to do here, stay out. And I just came back on Thursday. And on Thursday, it's quite a remarkable observation to see what the GDP numbers were actually telling us. And the data were not very, they were not supportive of the dollar. Honestly, they were quite bearish. And knowing fully well that when we came into the market session at 9:30, we had a extreme gap, right? So the market closed around 16 o'clock here on Wednesday and opened somewhere here. This gap had to be filled, and the news was used as a catalyst to fill that up, and the bearishness continued. Now, it looked all the same to me because I didn't see any excitement for me to be long all of this, but I was just waiting for the bearishness, and that was exactly what we got after this outsized reaction. And then there was this decision, and I think there was a decision that the Trump tariff was going to be back on again, and that just drove sentiment to just continue the work for the day on Thursday. So again, the bearishness has been sustained in my own opinion. However, money could have been made both ways. Like, I could make my argument for bearishness, but also there were opportunities to be long. On Tuesday, during the session on New York session on Tuesday, definitely there's a chance to be a buyer here. But my point is, we haven't really seen much movement that is convincing. However, the COT data tells us that we should be bearish, and for me, that remains even more important. Secondly, looking at the euro, how did the euro behave? Euro was spectacular for me last week in observing how the market was being positioned. So just coming back to the market on Tuesday to be interested in it, we I saw something very peculiar for me, which was the failure to take out the high of Monday, which happened on Tuesday. So the Asia high on Tuesday, and then by 3 a.m. on Tuesday, we saw the failure, an attempt to come to the high of Asia and then failed. This drastic close here for me was all telling that we should just continue lower. And if this was entered on, this was an easy 2x trade to have been framed here just by studying this. So around 3 a.m. here, stop loss placed above the Asian high, and you're expecting a 1 to 2 run. It gave you even more than that, but again, I prefer to just stay with the minimum. And yeah, 1 to 2 was well presented, and this was the trade for the week, and I'm like literally done. However, on Thursday, we saw another drastic drop again, taking out all the liquidity points um, in the euro. Let's look at it in the 1 hour. So we saw all liquidity points being taken out. Here's white, here's white. There's one more here. This equal lows were all wiped out. And we also made an argument last week about how we wanted to see a counter move that would be placed, that would be priced into the market, and they would have to use the GDP print as a catalyst, right? And that was what also played out to here on Thursday. The GDP numbers were building a case for bearish DXY, and that was what fed the move higher on the euro, and you had no reason to be short here. So again, it was just long the euro for the counter-based trend idea, using the GDP as the catalyst, and this played out fantastically well for me in my observations. Now moving on to what we have going into June. Again, I don't want to repeat everything I've been saying from my previous episode about the bearishness on suffice to say is that we have a continuous build of long contract by the non-commercials in the maximum level, right? These are levels of overcommitment, and we can also see an increase in the short, an increased level of long commitment by the non-commercials, also increased level of short commitment. Again, when I see the non-commercials overcommitted, this is a recipe for a reversal as well as them building their shorts. However, the non-commercials here will have all been there's nothing clear for me to base off of any um, to base any idea on, but I can understand that we've been seeing their net positioning being flipped to bullishness, and this is not what is going to take place right now, but it's going to be interesting for me in the coming weeks to see how that is reflected in the market. So the same thing, if you read my Substack, everything is outlined as to how I'm seeing the Nasdaq. Also for the euro, we see a consistent build of longs by the non-commercials. However, the commercials are the big ones here, and they are the ones I'm paying attention to because we see that they've increased their short commitment to a all-time 1 year high, and they keep on adding. Last week they had the all-time 1 year high. Again, this week they added more. And there's one interesting thing, which is the persistent decline that we can see here in their net position. For me, that's fine. But the main focus is that they are overcommitted to the short side, and this is usually a telling sign for a much more sustained move in the future in terms of a trend following the commercials. And the catalyst for me is definitely going to be anything after the contract expiry. I understand that we have the rate decision next week, but to me, the contract expiry is actually of paramount interest for me. We have to see what the ECB says, what their commentary are. We are going to follow that, no problem. And moving on as well, USD JPY shows us the exact same dynamics too as well, in terms of the commercials increasing their long commitments in USD JPY, while on the short side, the non-commercial thing on the other side. When we're talking about riding a wave, riding a trend, we want to be on the side of the commercials, and that is what we are seeing here to make a case for that. Also, noting well too that we have an open interest that's at very high levels too as well. So these are the main key takeaways when it comes to this, and also taking note that the contract expiry are coming into play as well. Next week is non-farm payroll. The rule is the same. Monday to Wednesday, we have intraday opportunities. Thursday, stay out. On Friday, after 10 a.m., we would see a much more simple setup. Let's take a look at the euro on the daily time frame now to compare from last week. So this was last week Friday close, and here was Tuesday, Wednesday, Thursday, Friday here. Monday was a public holiday. Now there's nothing confirmatory of a downside movement straight up from here. Again, I have to wait for Thursday. I have to wait for Tuesday close rather, right, to see how has market moved. And these levels that have been drawn here are actually quite interesting for me. I'm actually interested to see over the next 2 weeks if we are able to dig into this level before we go down, right? And again, I just have to wait and see. after a Tuesday close, is price suggestive of going lower again next week? The most important thing is going to be seeing how the ECB rate decision happens on Thursday. So actually, no move, no anticipation until after the rate decision next week for Thursday, and we would likely get a better understanding and feel of what they are planning. So again, it's just a week to stay on the sideline and just read and plan ahead of the major move which is going to happen during the contract expiry, which is February the 13th. So from the 14th of June, we would have a better view of how things should evolve. So a lot of patience would have to be tested here just to stay grounded. All right, so for NQ again, there's nothing spectacular about this chart right now for me to want to make any decision off of. So I'd have to wait for Tuesday close again and see how market reacts. However, the most important catalyst to here also too is what is the June 16th contract expiry. So one will have to watch and see how market are positioned towards the event. We also have a 4 hours candle here, and this candle is very, very interesting to me. We are likely going to be seeing a reaction from here, so I want to see how we bounce off. If price trades up to this level, I want to see how price roll over and continue lower. So if that happens, fine. If not, again, stay on the sideline and just wait and see. But this is pretty much a good area for me to see some reaction to the downside, and then we'll continue. So that's for the NQ. And I think lastly for UJ, which is the Japanese yen, I think this would confuse my viewers. Better I just use the UJ chart completely. All right, so again for UJ, the bias has been bullish and price has given us very, very interesting levels to watch. Um, from the daily perspective right now, everything is set for me, right, to be bullish this pair. So I just want to see again how markets are positioned by Tuesday close. Do we see a consistent failure not to take out the low that was formed on Tuesday? Then definitely we know the direction and we have a bias to as well. Not forgetting also to that we have a contract expiry on the 14th of June, so that's even more important than being early in the move. And basically, this is it for this week. Um, so to conclude, do well to observe the non-farm payroll protocol Monday to Wednesday intraday price action, and wait for Friday 10 a.m. for you to make any move. And that's it for this week's COT Outlook. If you found it helpful, like and subscribe, and drop a comment if you're watching any of these setups too. If you want to dive deeper, the full write-up is in my Substack, link in the description. Stay nimble, stay sharp. See you next week.